Good afternoon, ladies and gentlemen, and welcome to our webinar today on financing sustainable projects on digital platforms. My name is Navina and I represent Capital Markets Malaysia. Today's program has been organized by the Malaysian Sustainable Finance Initiative, which is an initiative by Capital Markets Malaysia, which is co-funded by the UK government through its Prosperity Fund and Capital Markets Malaysia. For those of you who are not familiar with MSFI, we were set up to support capacity building for Malaysia's financial sector in the area of sustainable finance. And we are supported by the ASEAN Low Carbon Energy Program with EY as the delivery partner. So today's program is 90 minutes in length. We'll go for the entire program without taking any breaks. And what we have lined up for you is Michelle, you can go to the next slide. Okay, so this is today's program. We start off with opening remarks by Karen Puah, who is President of the FinTech Association of Malaysia. We have a presentation by Russell Marsh from EY, and then we have case study presentations from fintech companies all over the world who have initiated programs in sustainable finance. So to kick things off, ladies and gentlemen, I'm very, very pleased to welcome Karen Puah, who is representing the FinTech Association of Malaysia. FAOM is a supporter of today's program. Karen, over to you.
Thank you so much, Navina. I'm going to share screen. All right. Okay, all good? Everyone can see?
Yes, we can.
Okay, great. Let's start. Thank you, Capital Market Malaysia and the team for inviting me here today. I am Karen from the FinTech Association of Malaysia. I would love to be doing this in person, but equally grateful that we are still able to connect virtually. Congratulations to the organizers for a successful event. Sorry. Last week, our Finance Minister, YB Tengku Zafrul, delivered the opening remark at the Malaysian Banking and Finance Summit. And he spoke about the coordinated approach. Sorry, give me a second. And he spoke about the coordinated approach towards ensuring progress in our economy and society at large. He called it the 3 Rs: resilience, recovery, and reform. And these are all directed to financial institutions. So fintech companies in Malaysia will be the 4th R, which is we are ready. For so many years, fintech companies around the world has been pushing new innovations and products. Kudos to the thousands of fintech companies for continuously surprising us with their ingenuity. Malaysia's fintech journey started in October 2016 with the launch of the regulatory sandbox framework. While we may not have a clear idea of where we were going in the beginning, we knew that this is an exciting sector and we should get it right. Fintech revenue worldwide was expected to increase steadily between 2019 and 2024. As of 2018, the sector's revenue amounted to 405 billion ringgit. Distinguishing by region, the Asia-Pacific region generated the largest share of revenue during the period under observation. According to the forecast, the revenue generated in this region is expected to reach 422 billion ringgit in 2024. Malaysia is an optimum-sized country with 32.6 million people. Despite our relatively small size compared to our neighbors like Indonesia, Thailand, and Vietnam, We are compact and concentrated with a lot of cities sprawled across the peninsula. These cities are all within reach of less than 1 hour if you fly, and traveling by car from the north point to the south point will take you less than 10 hours. We are an advanced country, digitalized, and has world-class technology and infrastructure. This country with 20.2 million smartphone users makes us a suitable market for any fintech innovation. Our market size has unmet needs, and digitizing the sectors is a mandate by our government and will give us more extensive customer base welcomed by fintech and investors. And in a way, opportunities bring new horizons when we define what fintech stands for. We expanded the definition, saying that wherever we can digitize, whether for the bank, serving the customer, or SMEs, trying to get into financial services, or time to adopt financial services, anything can help to move that narrative for us. Anyone that has an eye for expansion knows that you must quickly see the broader Southeast Asia as your market. And as of February 2021, there are close to 6,200 fintech companies in the Asia Pacific region. So that led to the birth of the FinTech Association in Malaysia. Today, we have served close to 300 fintech companies, over 1.15 million SMEs, and that represents over 97% of total business establishment. And as a bridge for the companies, making us the national B2B fintech platform. We work with the Malaysian government agencies to create collaborative spaces and opportunities for fintech companies to create meaningful solutions. And with more than 32.6 million people and a 95% bank population, this combination is ideal for any fintech company. The next exciting thing coming is the co-creation of the FinTech Playbook with the Central Bank of Malaysia. And we will be launching the website during My FinTech Week, which is starting 24th of January next year. So we have to continue to share this narrative and how important it is to increase our talent pool. Malaysia has been the hub to many tech companies, the likes of Dell, HP, Intel, and IBM since the 80s. Our large pool of tech talent is the beginning for us to build our human capital. Without the underlying human resource, we cannot get into fintech as we need to increase those capacities and capabilities. So we put a lot of effort into building that human capital. Today, we have more than 10,000 plus jobs created in this sector. Our regulators, and in Malaysia, we have Central Bank of Malaysia and the Securities Commission, are always open to engage with the industry. With the association, we have held many roundtable discussions to find a way to fine-tune the regulations. It may not be to change the policy, but at least we get the regulators to understand the changes within the industry and what the players are facing. We gather all the necessary regulations and those that need to be relooked, and we may need to have to take into consideration what is already available. For this, our Central Bank of Malaysia launched the regulatory sandbox to give fintech innovators to test their innovations. So we are progressive when it came to this whole idea of collaborating from day one. The success behind this comes from a very expansive and extensive collaboration. Our relationship with multilateral agencies like World Bank, IFC, and AFI, and also G2G dialogues with administrations and regulators from other jurisdictions. Most recently, Project Gamba brought together the Reserve Bank of Australia, Monetary Authority of Singapore, South African Reserve Bank, and of course, Central Bank of Malaysia with the BIS Settlement Innovation Hub to test the use of central bank digital currencies or CBDC for international settlements. So from the official sector to the private sector, we want a competitive financial sector and we want to promote innovation. With multiple partnerships in and out of the country, we ultimately hand over the sector to take it and move forward. We are not in the business of running a business, we are the facilitator of innovation. Last but not least, for 8 years running, Malaysia has been benchmarked #1 in the world by the Global Islamic Economy Indicator. with our vibrant Islamic fintech ecosystem contributing greatly to its impressive performance. So I've touched on the human capital, the favorable market size, progressive regulator, and the market that emphasizes on protecting its consumer. This makes Malaysia an ideal country to start and scale your fintech business beyond Malaysia. A perfect spot for anyone with an eye to reach out to over 650 million people in Southeast Asia. I would like to thank the organizer again for having us today. Keep safe and stay in touch. Thank you.
Thank you. Thanks so much, Karen, for that excellent overview of the Malaysian fintech landscape. Now, ladies and gentlemen, we're going to launch into a series of presentations. And before I do that, I'd just like to make two announcements. One is that all presentations will be made available on our website. So if you've registered for the event, you will receive an email after the event with a link to the presentations. And also we'd like to make this session as interactive as possible. So you will see that at the bottom of your screen, there is a Q&A box. If you have any questions for any of the speakers, please just type them in the Q&A box and we'll get to them after the end of each presentation. So next up, we have Russell Marsh. Russell is Director for Infrastructure Advisory, Strategy and Transactions at EY Singapore. Russell will be speaking on the market landscape of green digital finance platforms and innovative financing technologies. Russell, the floor is yours.
Thanks for that introduction, Navina, and good afternoon, everybody. I'm pleased to be able to join you this afternoon from my home office in Singapore. And as Navina outlined at the beginning, EY is delivering what's called the UK government's ASEAN Low Carbon Energy Programme. We're delivering a range of support and activities across ASEAN on a whole range of issues related to green finance. And as Navina outlined, we're providing support to the MSFI in Malaysia on a range of activities, including supporting them with events like today. And I'm going to give sort of an overview of what we call green digital finance. So what's interesting is we're now starting to see this kind of overlap between fintech, digital, and green finance. I've been amazed or not so much amazed, but it's interesting to know over the last couple of years, almost every fintech conference that is held has a quite strong sustainability and sustainable finance work stream as part of it. And I think that's just an example of where you're starting to see this merger and overlap of issues related to green finance, sustainable finance, and digital. If I could have my next slide, please. Thanks. So I guess, firstly, talking about now what is green digital finance. I mean, again, I think the definition is pretty clear. It's obviously looking to use digital technologies to help support sustainable finance initiatives aligned with what they call the SDGs, the Sustainable Development Goals. And I'll talk a little bit more about, again, some examples of how we're using fintech and digital to help achieve the Sustainable Development Goals. And I guess I'm sure most of the people on the call will be aware of what are the technologies that we're talking about. It's everything from big data to Internet of Things, including artificial machine learning and artificial intelligence, I guess, down to the more well-known and more well-used mobile technologies. And again, this is what we're talking about, distributed ledger technology, sort of a range of different technologies and platforms that all can play a role in helping to drive sustainable finance specifically, but as part of the broader drive to achieve the Sustainable Development Goals. My next slide, please. Thanks. So, so we've seen green digital finance gathering increasing recognition on an international level. You're starting to see, again, a number of sort of sustainable development, sustainable finance initiatives, also now starting to include digital finance and digital as part of that. And there have been some specific digital and sustainable finance initiatives and platforms that have been announced and set up, and we've outlined or listed some of them here. and we put the sources of those on the bottom of the slide. And when you get the slide, you can follow up on those particular references yourself. But I think it just shows again where you are now starting to see, globally, where you've got initiatives that were primarily focused on sustainable finance are now including fintech and digital within those discussions. And you can see on the left there a comment from the UN Secretary General about the importance of fintech and digital in terms of achieving the sustainable development goals. And to say we'll outline a bit more about what that looks like as we go through the presentation today. Next slide, please. So this gives, say, a market overview of green digital finance platforms. Just kind of shows what they have been, the applications, and again also, the amount of money that is being transferred and being used through those different platforms. We've got two here, sort of what we guess we call the most common. So mobile applications. I'm sure that obviously most people on the call, and certainly most people in Singapore, and certainly I guess in KL, if not across Malaysia, will all be using most smartphones for most of their digital, or most of their banking. I was reflecting the other day that when I leave my house now, I really just need to take my mobile phone with me. I don't even need to take a credit card, a debit card, or any cash with me, because pretty much everywhere I go, I can use my mobile phone to make a payment, whether that's directly in a store or using one of the apps on my phone to make that payment. And so clearly, mobile applications are becoming much more well used for finance. And again, this just gives an example of where platforms like mobile application websites can again be responsible and help the transfer of billions and millions of dollars for sustainable finance activities. So we've talked here about again how that can be used for renewables, financial inclusion, and for sustainable infrastructure. And again, feel free to look up the references we've included in here. But again, you can see how we can start to use some of these digital technologies to direct finance and direct investment towards, say, sustainable activities. Next slide, please. So looking again, and then obviously Karen had also had a slide in terms of sort of what we're seeing in terms of fintech. And again, this is another way of looking at some of those numbers. This is some money that stats that have come from Bank Negara Malaysia and a range of other places in terms of understanding what the growth of digital platforms in financing. And you can see, say on the left there, the number of applications that Bank Negara has had for digital bank licenses. The Ministry of Housing and Local Government approving new online money lenders. And again, at the bottom there, that quite large figure of the number of issues who've raised funding on crowdfunding and peer-to-peer digital financing platforms. And on the right-hand side there, it just shows you the sectors that have been funded through what we call this digital equity crowdfunding. I think what's interesting at the moment, obviously green and sustainability doesn't appear on that list. And it'd be interesting to kind of hopefully see, over the next couple of years, you would start to see more green and sustainable activities appear on that list. Next slide, please. And then what you've also started to see is, COVID-19 has, accelerated the digital transformation. And again, I guess no one will be surprised to know that. We've obviously all now been working from home. Many of us still are working from home, so have moved very quickly to doing much more of our work, certainly much more of our working lives remotely and through laptops and through other digital technologies. Obviously, things like Zoom today and Teams, they have all massively developed over the last year. And I mean, look, I think the figure there we've highlighted in bold on the right-hand side, where you've seen effectively 10 years growth of digital payments in just 4 months. And that's a huge growth in the market. And as I said, I was reflecting that, I think before COVID, sort of a couple of years ago, I still left my house and needed to have my debit card, credit card, and cash with me. But now I don't. I can pretty much guarantee that anywhere I go shopping or go certainly in Singapore, I can make a payment through my mobile phone. And say that wasn't the case, say a year and a half ago. And you can see there again on the slide there, again how that growth in terms of that acceleration in terms of how we've seen digital transformation in various different places across the world. And I think that just shows again, we have transformed how we operate, we've transformed how we work, we've transformed how we do transactions. And I think certainly in terms of sort of the digital transformation in terms of financial technologies, I think we're unlikely to see people going backwards in terms of going back to some more traditional ways of banking and finance. Clearly in some other areas where we've had to move online, I think we're hoping that over the next 12 months we will be able to be more mobile and have more in-person meetings. But I certainly think that a lot of the activities we've been doing digitally over the last few months, couple of years will continue. Next slide, please. So this just looks at, okay, what's effectively what's the prize? So how can digital finance really help support the achievement of what we call the sustainable development goals? And this is some analysis, there's some numbers that have been we've drawn from a number of different places. But I think certainly that figure on the top left, we talk about 1.6 billion people in the emerging economy provided access to financial services. And when we think about sustainability in its broadest sense, where digital finance can really help is providing access to people who currently can't get easy access to it, to financial services. And I think that is one of the big opportunities for digital finance in relation to sustainability, is how can it increase access to financial services. And I've again been reflecting how in some parts of the world and the region, people would have struggled to be able to get to their bank, because their bank could have been several, if not tens of kilometers away from where they were. But actually, if they can now access it via a mobile phone or some other digital means, they'll have much better access to financial services. And so when we start thinking about sustainable finance and sustainability, we're not just thinking about green, we're thinking about the other aspects of sustainability. And access to financial services is one element of that. And you can see there again, kind of the prize in terms of how what digital finance can do in terms of helping build economies and say build sustainable economies. Next slide, please. So also looking at it, looking at the sustainable finance side, and you can see that we've seen an uptake in sustainable growth. I mean, there still are some barriers in scaling sustainable finance. And this is one of the challenges where around things like definition of what is sustainable finance, how you identify what are sustainable assets, and also the need for a large amount of data to help support that. I mean, again, that some of that is still at the very early stages of being developed on the sustainable finance space, and that does kind of present a challenge in terms of the speed by which some of these digital platforms are emerging, and again the speed by which some of those digital platforms are looking to incorporate sustainability within their operation. And yet in terms of sort of having a broad understanding of what sustainable finance means and different types of assets and projects and activities that could be financed, there were still some challenges in terms of, and the market's still relatively new in defining some of those. If for those of you who do follow what goes on in sustainable finance, I mean, it's not quite this speed, but almost every week there's a new sustainable finance product that comes on the market aimed at one particular aspect of sustainability, and it can be quite challenging to keep up with all the developments in sustainable finance, even as someone who focuses on it full time, let alone for people who it's not the thing they do every day, but do want to try and engage in sustainable finance and sustainability, and that can make it quite difficult. Having said that, that's where technology can help. Being able to have technology that is able to make some of those decisions a little bit easier and be able to rapidly respond to the changing market in terms of sustainable finance. Again, is another benefit of where you can see the integration of sustainable finance and digital. Next slide, please. So looking at, again, where can we start to see how FinTech can invest and finance sustainable projects? So where do you really start to see some examples? And we'll hear some case studies in a moment. But just to look at, again, how can we start to apply FinTech to sustainable finance? And I've mentioned some of these already. So, investment decision making, and when again we talked before earlier about in relation to sustainable finance, one of the things it needs, we need a lot of data to understand again the information that's available in terms of the activities that are being financed, and whether you can define them as sustainability, and obviously where things like data and machine learning can really help in terms of that data collection and analysis to kind of make analysing ESG performance of certain activities and certain funds a lot easier, because the data can be processed much easier. And obviously you've got blockchain, which can help in terms of, again, providing that level of security around the verification and tracking of particular investment products. And IoT, again, can help make data available through tracking and real-time monitoring. So those technologies can really help improve the data availability and the data processing and the analysis related to sustainable finance. Can help incentivize sustainable choices, making it easier for consumers to make finance-related choices. You'll see in a moment some examples of where kind of consumers can sort of choose in some investment products, can make choices related to their SDG choices. Again, IoT and blockchain can provide this verified and detailed information on environmental impacts. And again, then looking at again, you can provide new sources of sustainable finance. Again, we're not just talking about the financing of green products specifically, but more broadly, again, how can you build sustainability through finance? And we've talked kind of getting low cost access to finance. So crowdfunding and peer-to-peer can make a new proposition, can make it easy in a low cost way to get access to finance. SMEs can get access to a much broader pool of investors, because they can use say some of the platforms to reach out to a broader set of people. Again, the data can help in terms of automating some of those processes. And again, you can really start to see what they can matchmaking, where you can start to see matchmaking of sustainable technology businesses with investors. And one of the things we've picked up, working on the sustainable finance side of this, at one level, there's no shortage of money wanting to find a home in a sustainable business or invest in a sustainable activity. And again, one of the challenges is how that money finds the sustainable technology or the sustainable business to invest in. And again, digital and fintech can help in terms of that matchmaking between where someone has money to invest and is looking for a project to invest that money into. And finally, they're looking at some innovations in the financial, what they call the real economy. So again, you've got things like mobile payment platforms enabling in the off-grid space, business models around private equity and venture capital, and in the insurance sector, we can kind of use usage-based insurance, and you can start to have kind of different ways of pricing insurance based on, say, kind of how people's actual behaviour, rather than just specifically in the locations. You can start to see how some innovations in the use of digital can really help kind of say, make accessing and deploying sustainable finance a lot easier. Next slide, please. So this is just a case study. Again, it just shows about, again, one particular web platform that makes it easier for a whole range of different investors to invest in specific projects related to a number of different sustainable activities. it says, you know, kind of the process here where, you know, you can set up an account, you choose the type of investment you want to make, and then, you know, that you're then able to invest in particular sustainable projects. And you can see at the bottom there, you know, that it's you know, been relatively, well, very successful in terms of the amount of money it's been able to generate and invest, how many projects it's funded, and the return that has been made. And you can see again, you know, so it's focused on renewable electricity supply, you know, cogen, and working on a company called Living Power in terms of short-term power, in terms of electricity, using electricity from used cooking. I think that, again, that's just an example of, again, a platform that is able to, you know, allow a number of investors to decide whether they want to go put their money, invest in sustainable projects, and say that's been relatively successful. Next slide, please. Another example of this, you know, it's what they call 2150. This is a venture capital fund that, again, seeks to look at back technologies that make the urban environment more resilient by reducing its carbon footprint, and sort of and it outlines there how kind of it focuses on what they call the urban stack, and again focuses on tech companies, what they call gigacorns, you know, for funding based on their potential to benefit the billions of people and lower gigatons of emissions. So it's really focusing on, you know, how you can use technology to reduce emissions. And again, you can see on the right hand side the outcomes that has had in terms of both how many emissions it's saved, and how much, you know, reduced energy use, and again how much money they have managed to raise through their funding round. Next slide, please. This is another one, an example again where, you know, a company called Rage Green and IBM joined together. They built this marketplace to allow both investors and green startups to transact. You can see there on the left hand side how it works in terms of, you know, creating the account, and you pick a local climate action project, you know, the project's funded, etc., etc. You can see how that works through that loop. And again, on the right hand side, I just talked about a bit more about the projects that they've invested in. And again, you've got, you know, you've got solar projects, affordable housing, energy efficiency. Companies are able to, you know, kind of create filings for SEC Commission, get legal and financial templates, financial modelling support, and obtain checklists to make sure their project stays on track. And again, that can all be done digitally through the platform they have developed. That can make it a lot easier for you know, new startups to get into the market. And also, this is focusing particularly on you know, companies that are green. And so, you know, talked about the Ethis, this filter company, and Elmley Renewable Energy. And again, they're two organisations have benefited from this platform. Just another example of how using a digital platform, I say, can help new startups, and particularly new green startups, get into the market by making it a lot easier for them to go through some of those processes that they need to go through. Next slide, please. And this is again another one, Climate Invest. So again, it's another one that allows easy way for people to invest in climate projects. It works through an app. You know, and again, you know, investors are asked to choose their risk profile. Gives some examples of the companies in that portfolio be chosen, and the fees that would be paid, and then investors can decide between the type of accounts that they would like. And again, and then, you know, Climate screens the companies that's investing in through that platform, both in terms of, you know, financial, environment, thematic screen, and say before it selects those stocks for the companies and puts them into the portfolio. I think that's an example. They say you've got a mobile app that people can now use to make it a very easy investment into publicly listed businesses, and they can, that will reflect their values. They can say in terms of an environmental screen or financial screen. And again, I think it's an example of where now so you'd be able to do some of these things, you know, from the comfort of your own home, from anywhere you want to do it, with your mobile phone. It makes these things a lot easier. And I can remember, you know, not that many years ago, trying to work out, you know, how you could invest in a an environmental fund or a sustainable fund, things like making sure where your pension or your insurance product was going to, was really difficult to do that. That's now a lot easier in terms of being able to get some of this information digitally through your app, in terms of really clear, what it is that the company you've signed up to is investing in. Next slide, please. So, that brings me to the end of my presentation. So, hopefully gives you a broad outline of some of the opportunities of the interaction between sustainable finance and digital. And again, some of the challenges and some of the opportunities. I think we're now going to hand back to Navina to take us, introduce the remaining three panelists.
Thank you. Thanks very much for that, Russell, for that very comprehensive overview of the landscape. And next up, ladies and gentlemen, we have 3 case study presentations. These are all FinTech companies all over the world who have prioritized sustainable finance and investing in their product offerings. And first up, I'd like to welcome and introduce Andreas Lehner, who is co-founder of Trine in Sweden. So Trine is a Swedish fintech company that aims to make it easy for people to invest in solar energy by connecting solar businesses in emerging markets with capital through crowdfunding. So Andreas, the floor is yours.
Thank you, Navina. Let me just share my screen here, and thanks for the introduction as well. I think your presentation, Russell, gave quite a good overview. So basically, like Navina said, I'm one of the co-founders of Trine. I'm talking to you here from Sweden. It's kind of early-ish morning here. And we are exactly operating what Russell described in his presentation as a peer-to-peer investment platform where we connect investors in Sweden or in the EU for our digital platform with SMEs in emerging markets. So we're basically like a market maker, you could say, in that sense, where we on the one side have this individual, mainly retail investors that are looking for sustainable investments. Obviously, that's the big new thing. It's the one thing that you can do that has the biggest impact on the climate. But that also look for a way to diversify their portfolio, because not everybody has easy access to investing in emerging markets. That gives them a somewhat non-correlated investment opportunity, even though Corona has proven that we are all interconnected in the end anyway. And it's also a stable return product if everything goes well, because what we provide them with is it's like a debenture bond instrument. So it's basically a debt instrument, a fixed interest debt instrument. So you have a very attractive investment opportunity for people in Europe. And then you have the SMEs in emerging markets, especially in sub-Saharan Africa, but increasingly Southeast Asia, which might be more relevant for this conversation, and Latin America, that are looking for finance, especially in the niche that we're targeting, which is renewable energy, and even more niched solar energy. And the SMEs in that sector have often a lack of finance, especially in sub-Saharan Africa, where they have high upfront costs of capital, but hard ways of finding to finance them. And even if they find that capital, it often is a bit of a cumbersome way of getting it through the DFIs, the development finance institutions, or bigger development banks, which normally are not the most business-friendly partners to work with. So we really try to be very business-oriented on their end with short lead times, quite depending on what you compare it with, low cost of capital, and the flexibility in the sense that we really try to model our financing offering to their underlying assets and the underlying cash flows. So what we finance is, for instance, a solar project in Kenya that has a cash flow of 5 to 10 years through a power purchase agreement, and we really try to model our debt to be able to be repaid by that cash flow in terms of tenor and in terms of how it's structured. And it's quite scalable, of course, because it's on the one side digital, but it's also it can be scaled through other means. We have institutional partners that are coming in, that are co-financing some of the loans, like the Islamic Development Bank. So there's a lot of scalability here. And we just connect those two entities so they can benefit from each other. Like I said, we are very niched. We believe that focusing on one thing and being really great at it is one key to success. So we only finance solar energy, but then in that segment of solar energy, we have different cases, so to say, different segments, sub-segments. When we started, which was around 7 years ago, we really focused on the solar home system segment, which is quite big in sub-Saharan Africa, which is very small. It's a very small installation. Like here on the picture, you can see an installation or somebody installing a solar home system in Kenya. It's really not much more than 10, 20, maybe 50, sometimes 100 watt, but that's it. And gives basic access to energy. These installations happen in rural communities where there is no electricity grid, where people rely on kerosene lamps for light or diesel generators if they're more affluent for electricity. And this gives them a clean source of electricity, but also access to information through TV or radio, phone charging, which they normally would have to walk many kilometers to charge their phones. And in some cases, if it's a bit bigger, if it's a few 100 watts, then you can also have a fridge, which then helps in terms of preserving food, for example. So huge social impact and a pretty big environmental impact there. Recently, in the last 2-3 years, we moved, however, in the other segment that you see in the middle here, which is more the commercial industrial ones, where we see a lot more scale. Especially now that solar is becoming really competitive with the alternative energy source, be it the grid, or in many cases where we are operating or financing diesel generators, which are very expensive. So this is normally installations, I would say sub 2 megawatts, from starting 100 kilowatts, so much more like the standard installation that you think of when you think about solar, often on rooftops of manufacturing plants, or well, any kind of SME, really, like bank branches, rose flower farms, whatever you can imagine that needs electricity and is having some sort of productive use case. Here we provide more like project financing. So in the solar home systems, what we do is normally more receivables financing and working capital to buy those systems. The clients pay them off over 2 to 3 years, then they own them, and the SMEs through those payments pay us. In the commercial industrial segment, it's really asset finance. So there's an asset company that holds the assets. We provide the debt to that asset company. There is an equity portion in it. And those SMEs normally have a power purchase agreement or lease to own kind of model, which then runs up to 20 years, most of the time a bit around the 10-year mark. And we are normally providing them with the debt for 5 to 10 years to cover the payment terms of their clients. And we see huge growth in that segment. I mean, also Southeast Asia, Vietnam, for example, is a huge market for this kind of installations, and it makes a lot of sense. Versus the solar home systems where we started, which a lot of the companies in that segment are still on the path to profitability, which means as a debt investor, it's not the most ideal investment because you rely a lot on equity investments coming in, versus commercial industrial is most of the time already profitable. And lastly, out of the 3, that's the segment that we are least in. It's the mini grids. We have done some investments there. It's kind of a mix of the first 2. It's not as big as a commercial installation, but it's rural and bigger than a solar home system. So it's normally a centralized installation, like here in the middle of a village in Kenya. I don't know what that was, maybe a few kilowatts. And the advantage with those installations is that you have better access to services, productive use for the community, because getting a TV and lighting is a good start, but it's not really an end goal. So with these installations, you can power water purification plants. You can power refrigeration services for like shop owners to actually provide, better quality food, or I mean, in these days, maybe more relevant, vaccination, ways to refrigerate that, or milling. You can mill your wheat instead of going 4 kilometers to do it in a neighboring town. So it provides a lot more local services and value-added services in the community. The problem here is that many of those installations are still not bankable because the capital costs are so big, and the communities often don't have the money to pay for it over short time. So it's normally very long tenors and high risk investment. And so we haven't done much here. We're looking at one case actually. And the financing there is pretty much the same as in the commercial industrial. It's project financing if it's more advanced in an asset company that owns all the assets in the country and pays back through the cash flows generated of those. This is not so much, I mean, it could be a PPA, but it's like pay as you go. In a lot of markets you have, and solar home systems as well. You pay with your mobile phone. So again, digital financing in a way. You buy a certain amount of electricity or a certain amount of days of electricity that you can then use for your smart meter in your house. And once it's out, you have to purchase a new amount. It's like all in the old days, you had those electricity meters in UK homes where you put like pennies in and then you had a certain amount of electricity. It's basically the same, but digital. So this is kind of what we finance. To go a little bit deeper, to give some examples, here we have Bbox and Greenlight Planet. Those are big solar home system companies all over the world, mostly in, again, sub-Saharan Africa, but also Asia, where we have financed them with over 10 million euros over the time of our partnership with them in several, like over 10 loans. How we work with our companies is that we generally provide them with a framework of a certain volume, let's say 10 million, from which they can draw down in tranches from starting of 100,000 euros really, but sometimes 1 to 2 million as well. So there's a lot of flexibility there as well. And we really aim to be long-term financing partners because we really understand the solar industry. We have been in it for 7 years, so we really try to be there for the long run and scale with those companies. And then we have Daystar Power, which is a big commercial and industrial company in Nigeria or West Africa, in several West African countries. Also over 10 million invested in their projects. Here we have mainly C&I installations on bank branches, which is a very interesting investment case because it's a very reliable off-taker in the sense that they have good cash flows themselves. And it's a good impact as well. But increasingly we're doing other things with them. We're actually also looking at electric mobility powered by solar. So they have done several megawatts in those markets with commercial installations. So this is just an overview of how we work with our partners. Like I said, we provide either working capital, project finance, receivables finance, on-balance sheet finance. So we really do a lot of things. And the flexibility in it is also that we normally really only look at the assets and underlying assets instead of what a lot of traditional banks do in those markets, where there is not a lack of finance, but they then require personal guarantees or pledge on land, while the finance is really only needed for the asset. So we really see the asset and we use the asset as a security. And if something happens, we have those solar panels, which is basically a commodity these days, especially the big ones, of course, and then deal with that instead of having a personal guarantee of a director, for example. As a company ourselves, we are soon getting into 60 million euros financed through our platform over those years. So that's a real good case and of scale. Those 60 million have offset nearly 500,000 tons of CO2 or are in the process of offsetting this, because obviously it doesn't happen from one day to the other. and have given electricity to over 2 million people. Especially, of course, in that metric is more the solar home systems that actually provide energy access versus the SME kind of installations where you look more at infrastructure. And most importantly, I think out of these numbers is that we have actually proven that it works, that those investments are not just an impact, do good kind of thing, but you actually can make money because we've repaid 30 million back to investors in both capital and interest. So this is kind of for us was very important proof case, because this triple bottom line investing often sounds too good to be true. And obviously it doesn't come without its risks. It's a more risky investment than many others, investing in emerging markets, but it's doable, and it is providing a return as well. This is just a bit to give you a bit more of a visual. So this is how the platform that we operate looks like. It's a website. So in Vasil's example, this would fall under the website. We don't have an app yet. Where you see on the left, you see the investment opportunities that you as an investor can choose from, different countries, different type of products. You have CNI on the top, clearly a big solar installation on ground mount, and then you have the solar home system as the second one. So you can pick what you prefer more, shows more social impact or more the infrastructure, potentially lower risk, but also lower return kind of investment. And then you see the details of one of those campaigns, which is one of the day's investments we've done. Compared to other traditional crowdfunding platforms, we do all of this ourselves. So on the borrower side, we are just like any other fund, where there's an investment manager that walks you through the process and basically handholds you through the due diligence, because we do our own due diligence as well. And the person that you basically send requests for disbursement to, our marketing team then does the rest. So creating that page and getting the investors, because we see that as a bit too cumbersome, at least at this stage for our SMEs. And also we want to have a certain quality on the platform, and it's quite standardized by now. So we see this actually as a more scalable way of doing our financing solution. And then when it comes to impact, I mean, obviously what we do is an impact investment, and it's clean energy, it's renewable energy, but it's always good to get a validation externally. So we did an assessment with the UNDP, which was more on the solar home system segment, but most of these SDGs apply to the commercial industrial investments we do as well. And the UNDP basically found out or investigated and kind of put out that we are addressing 10 out of the 17 SDGs. Some more obvious ones, obviously, from eradicating poverty to better health, because we're replacing dirty fuels, to some that are maybe a bit more indirect, like quality education, because either you have access to information all of a sudden, or you can study at night when you have better lighting that doesn't make your eyes really go dry with those kerosene lamps. To gender equality, because it's a lot the women in those villages that make the decisions to buy those systems, and then it gives them more opportunities to either study or work for themselves late at night. And in the more commercial kind of investments, we have obviously more infrastructure and economic growth aspect, because it's more bigger asset in the country. And clear climate action. But there's a huge potential here to make an impact with these very decentralized installations in those countries. And we see that the growth will just continue. And a lot of countries will leapfrog the grid as we know it, because we have smarter technologies now than we had 50 years ago. So we see this as the future. And if you look at B-Box alone, with the solar home systems, they already contribute to 6% of the national target for climate mitigation. So it has huge potential to be a climate solution out there as well. That was, I think, a brief overview of what we do at Trine.
Andreas, thank you so much for that. That was a wonderful presentation, and thanks very much for sharing your case study. I don't see any questions yet in the Q&A box, so I'm going to go ahead and introduce the next speaker. So next up, ladies and gentlemen, we have Wan Dazric Wan Zulkifli, who is CEO of Ethis Ventures Malaysia. Ethis is a crowdfunding platform registered with the Securities Commission Malaysia and the only one in Malaysia to offer a Shariah-compliant solution. Dazric, the floor is yours.
Hi, good day, good afternoon, depending on where you are, everyone. Thank you so much, Navina. Yeah, it's a bit of an honor as well to share some of the insights and thoughts around sustainable financing. Largely, the case that I'm going to go through with you all is from generally Malaysian landscape. But also our effort to what we consider to circulate good through the equity crowdfunding platform that we are doing in Malaysia. Just on Navina's point just now, we're not the only one that is Sharia compliant in Malaysia, but rather the only one so far that is recognized by the Security Commission of Malaysia to run a Sharia compliant equity crowdfunding platform. I'll share my screen now and allow me to share some of the key highlights or insights for the next 10 minutes or so. And as Navina mentioned, if you have any questions, feel free to put into the Q&A. And then we'll attempt to address that as well, maybe towards the end of my sharing. Okay, I hope you all can see my slides. Over the next couple of slides, I'll tend to draw some of the inputs from what maybe Russell have mentioned on earlier with regards to the industry insights on why alternative financing or sustainability financing is something that not just in Malaysia, but also the general population are looking at. And this is something that perhaps I would try to draw some of the real case to be shared with the members here. Before I go on any further, just a bit of a background in terms of what we do and why we are in this space. Our vision is pretty much to drive, impactful and effective circulation of capital in the real economy. What we mean by that, in the normal banking ecosystem, there's a lot of challenges for the marginalized community, the banks, the businesses who are not served by the banks, what we call the unbankables, to get access to capital. We see fintech, or rather the crowdfunding, is a mean to perhaps provide that channel to the community or the businesses where the unbankables can't access capital. And I guess this is what Russell mentioned earlier about innovation and access to capital in the real economy. This is something that we champion. This is something that is close to our ethos as well when we do businesses. It's not just about profit maximization, but it's also to create that real impact to the economy. And of course, with that, our vision also is to uplift humanity through financial technology. When I speak about the unbankables, I think in the large population of Malaysia, it's pretty much the B40s, the bottom of the pyramid. Sometimes with this COVID situation, the M40s are also impacted. And I think this is something that a fintech company like us are able to address or to minimize the gap. And this is something that we wanted to scale further beyond as well. And our positioning here is really about equitable and fair. And what I mean by that, and in fact, what we mean by, when we go a lot with what Ethis does is with regards to the Islamic principle. Ethis itself, the name is ethically Islamic. But when we speak about Sharia compliant, with Islamic finances, it's really about promoting the concept of equitable and fair. And this is what we mean, not just in the lens of the return to shareholders specifically, but also the interest of stakeholder at large, or rather the stakeholder capitalism. And this is where, I think there's a lot of opportunity for fintech, or rather investors, businesses, ECF operators in not just Malaysia, but globally can do more of and provide this innovation to benefit the society at large. I'll draw a bit of a landscape, and I think Karen have mentioned this earlier, but I'll zoom down specifically to the ECF play in Malaysia. In Malaysia, it's a booming space. In spite of COVID happening in 2020, transcend to 2021 and even prolong even further, ECF space is continuing to be on a positive trend. In fact, I think a comparable data from 2019 to 2020, the take-up rate from crowdfunding, whether it's ECF or P2P in Malaysia, is up 43%. And this is something that we continue to see growing. And I think this is what, alternative financing are becoming, not to say mainstream, but a lot of adoption with regards to retail investors, sophisticated investors, and obviously the VCs and PE side. What that does for the supply side, or rather from the business side, where businesses are no longer able to get financing from the banks, where businesses are finding it a bit hard to find, or rather, to provide the collaterals for the banks, for the businesses to scale, especially the micro, small, medium enterprises in Malaysia, which is actually a 97% mix of the Malaysian businesses at large, are pretty much impacted by the COVID-19 pandemic. And what it does is actually provides a lot of opportunity for businesses to find an alternative financing through crowdfunding, or rather equity crowdfunding. But secondly, also it gives opportunity for retail investors in Malaysia to diversify their investment portfolio. And then this is something the equity crowdfunding players, or rather the crowdfunding players in Malaysia, are aware of. And I think there's a lot of opportunity to dabble or to do more in this space moving forward from 2022 onwards as well. These are some other stats that I would also share. This is actually a report, or annual report in 2020 that is done by the Security Commissions of Malaysia. If you see in 2020, the conventional ways of fundraising, whether it's through corporate bond, secondary issuance, are still there. But some of them have reduced from the 2019. In the example of corporate bonds issuance, it has reduced by 21%. You see the IPOs in the ACE market also have reduced, and also the LEAP market. Interestingly enough, and this is something I alluded to earlier, the financing, or the alternative financing through crowdfunding, whether it's equity to P2P, have actually had an increased uptake of 43%. And I've mentioned earlier, I think this is where we see the growth trajectory is likely to continue for 2021 onwards. And what it does, I think it gives a good opportunity for a lot of businesses, or even the ecosystem in Malaysia, to continue to grow in the ecosystem of capital markets, or even in the equity crowdfunding specifically. Now, coming back to Ethis, with regards to what we do, and I draw on this only 4 key verticals as what we have done quite well, and what we continue to do, at least in the Malaysian space. We only focus, or rather double down on 4 key industries at this point of time. One being with regards to property here in the form of social housing. I'll share that a bit. This is something that we have done in Indonesia, and this is something that we hope to emulate in Malaysia as well. Secondly is with regards to the agri sector, agriculture or agri-tech. When we speak about agri-tech, it's really about, embedding technologies. I think Russell have mentioned this earlier around IoTs, data, how do we improve or help improve the livelihoods of farmers, for example. As you're aware, Malaysia, we've got a lot of drivers in the agriculture sector, whether it's paddy, palm oils and stuff like that. This is something that we continue to champion, or rather help businesses in the agriculture sector to continue on sustaining, but also scaling. Third being, I think this is not very specific to Ethis, but the micro SME startup segment is a common playground for them in the space of crowdfunding. But we see, where there's technology involved, there's always a potential to grow. And this is something that is quite common for crowdfunding players, whether it's P2P, ECF, to see whereby MSME, SME, and startups are fundraising through the platforms. The fourth one is probably a bit more specific to Ethis. We also actually champion halal and circular economy. Circular economy here in the case of social enterprises. A lot of our base investors, and Russell mentioned earlier, aside from the triple bottom line, maximizing return, they are also looking to find ways to circulate good or amplify their impact through their investments. And we see there's a lot of circular economy players in this space. In the case of social enterprises, where they do businesses, but they impact the underprivileged community, for example. And quite close to that is actually the halal economy. This is something that we need to do a bit more aggressively. I think there's a lot of R&D in halal industry, but there's a gap between R&D and commercialization. And I think a lot of startups or businesses in Malaysia in the halal industries are looking for commercialization. In fact, this is something that we hope to do more with the ecosystem players in HDC, halal development corporations, industries and stuff like that, to bridge that gap. If some of you are aware, our Prime Minister yesterday have launched the 12th Malaysian plan, or the Rancangan Malaysia ke-12. And it has a specific reference to the development of halal industry through crowdfunding. And this is something that I think crowdfunding platform can also play a role in terms of the growth and development of either circular economy or halal industry, broadly speaking. Now, putting more picture into the industries I've mentioned, and I've spoken about, the social housing in Indonesia that we've done. And so far, this is something that we wanted to emulate in Malaysia, but I think this is a bit of challenge with the prolonged lockdown of COVID-19 and stuff like that. But this is something that what we have able to do in Indonesia. In Indonesia, we have actually managed to crowdfund, about 1,850 investments from 47 different, investors from 47 different countries, of which from that countries or rather investment, we have managed to raise about 13 million bridging fund. And what has that been, convert into is actually the projects in Indonesia are able to build 9,700 houses of a valuation of a value of a project of around 140 million. But beyond the money trees that I've mentioned earlier, I think what is good to note, and a lot of these investors are also quite keen when they invest in this project, is actually the impact to the community, society, or environment. In this case, it's the community, whereby out of those houses, we're able to provide, roof, pretty much shelter for about 38,000 people in Indonesia. And we see this is something that we wanted to continue champion, and not just Indonesia, but maybe in Malaysia as well, where social housing or rather housing or property is becoming more of a luxury items for the B40. There's a lot of, I guess, projects or industry players who are keen to provide affordable housing. And this is something I think, players or rather through FinTech, crowdfunding, digital platforms can also help bridge that funds. And this is something that we continue on pushing and hoping that we can materialize in Malaysia as well. I wouldn't drain so much on this slide. I think for all of you, or rather for most of you who are in the investment space, this is kind of bread and butter for everyone, right? When you do investments, I think for businesses, one being the key ones is actually the businesses have to demonstrate one way or another high growth potential, or if there's no high growth potential, a sustainable income or revenue stream. That's a key, almost a prerequisite when investor invest in the business. Obviously, coming close to that is actually the benefits, how attractive is the targeted annual dividends, and stuff like that. What I wanted to focus more on today, or rather the next 2 points, are on the benefits, and this is what I guess our set of investors are always emphasized on when it comes to sustainable financing. When you do investments, right? The third lens that they will usually wear is actually, okay, what is the social impact through the money or dollars or ringgit that they spend on, right? Beyond the dividends, beyond the returns, etc. Can that money actually amplify to benefit a certain group of communities, marginalized communities, refugees, for example, in the case of social housing. And we see this trend, not to say funnily enough, but quite interestingly enough, continue on growing. And I think in the case of Trine just now, they have done some sort of impact measurement. This is something that we kind of wanting to do more of, because we see there's value with regards to doing impact measurements, not specifically reporting, but articulation of those social or environmental impact benefits. So we see, a lot of sets of investors today, whether it's from sophisticated high net worth individuals, retail investors, or even VCs and PEs, are starting to put focus or emphasis on the impact measurement. Fourth, I think this is quite specific to Ethis. We are, I've mentioned earlier, a Shariah-compliant company. What that means is that we promote equitable and fair ways of doing businesses or fundraising, not just for the issuers, in this case the business owners, but also for the investors. For some of you might be aware, we can't do interest-based loans, for example, because it's a concept of riba, which does not help business owners, for example, among others, right? So some of the conventional banking ways of doing things are not subscribed in the Islamic ways of doing things, and that's why we focus on as well, and perhaps as a form of education needs to be done for both issuers and investors. But we see this as something of a long-term sort of benefit for both, issue and investors to get that alignment. I can go on to a separate topic on that one, but these are some of the 4 key areas or criteria when investors want to invest in sustainable projects through Ethis. The first 2 are quite conventional: growth potential, revenue stream, dividends. And the third one is quite interestingly now becoming a focus of attention with impact measurement, impact benefits, and obviously the fourth one is with regards to the commercial or Sharia arrangements that come to play with all these investor set. I have one last slide to share, if this is okay with everyone. I just wanted to share with regards to our live platform, just to show you guys, what kind of deals that go through in our campaign. I'll just spend a bit of 1 or 2 minutes, if that's okay, just to give you a bit of an insights in terms of what our campaign looks like and stuff like that. Actually, you guys can I hope you guys can still see my screen. You guys can actually go explore the live webpage. It's actually ethis.co/my. And as how Trine has the projects on their platforms, we have our Malaysian projects, I guess, in our platform, and you can see the ranging of the projects of the 4 pillars that I've mentioned earlier. When it comes to agriculture, estate sepakat is one of them, improving farmers' income and food security. Accelerate Global is actually a social enterprise. When they run programs, it's not just about the returns that I've mentioned earlier. So a lot of our shareholders, or rather stakeholders or investors, are looking to the societal impact. And in this case, for Accelerate Global, they focuses on improving life or livelihoods for the underprivileged or the marginalized community, predominantly in Sabah or Sarawak, the Borneo part of Malaysia. And this is something a lot of people are inclined to invest on beyond the profits and the margins, etc., etc. Yeah, you can see other campaigns. There's things around renewable energy. There's things around technology enablement, ways of doing businesses and stuff like that. But yeah, and then this is actually the one that we just launched yesterday. I guess it is specifically for well, I can say for Malaysian. I think to do wasiah or inheritance, is something that is quite a bit of a challenge, especially with doing manual paper and stuff like that. There's startups and businesses who are digitalizing or digitizing some of these processes and using digital assets. This is what I consider the tomorrow tech, the technology of tomorrow. And for investors, who are keen to look into technology and stuff like that, and has a social elements or impact to the community, a lot of our set of investors are going for both. So that's why the type of projects that we put on our platform, resonates to what we call circulating good. So it might not be directly to the environment specifically, but has a impact amplification to the society at large. And I guess this is what I've mentioned earlier, drawing back to some of Russell's point, right? One being, about investment decision, things around ESG, triple bottom line. A lot of the current investors nowadays, or more savvy investors, are putting that into their lens when they wanted to invest or not to invest in certain projects. Secondly, it's about that sustainable choices. In the case of the platforms that I've showed earlier, it's about, beyond the money, can you impact the livelihoods for farmers, the non-privileged, underprivileged and stuff like that. And I guess the third point that Russell mentioned earlier is around, the innovation and access to capital, to real economy. I think a lot of the fintech players or digital platform players can unlock that access with the stuff that we do. Yeah, so that's all from me, and I could pass back to Navina. I hope I didn't went over time. I apologize if I do.
No, that was perfect. Thanks so much, Dasrick. We do have one question from the audience, and actually it's to find out if people outside of Malaysia, if someone is residing in Singapore, can they participate in these crowdfunding programs?
Yeah, good question. I got that. It's almost like an FAQ question. So because we are governed by the Security Commission of Malaysia, for as long as the company is registered in Malaysia, we are able to do crowdfunding, or rather equity crowdfunding in Malaysia. I can speak only on ECF because that's my play. So the answer to that is actually, as long as you registered in Malaysia, the Security Commission allows you to do crowdfunding through the ECF platform.
So that is for a company that wants to raise funds, right?
Yes, correct.
What if they want to invest?
Yeah, so investors, not necessarily. In fact, if I could share, and I've shared this earlier, the 47 investors from various countries that do the projects, they can actually fund through Ethis to raise that. And if I could share also, I think quite interestingly enough, it's actually, we got set of investors from Southeast Asia. When I say Southeast Asia, majority in Singapore, there's a good chunk in Malaysia. But there's also a large portion of our investors are residing in UK, the Europe, and also the Middle Eastern. And that's quite interesting because a lot of Middle Eastern, if I could share, aside from, like I mentioned, return on profitability is also to amplifying impact through sustainable financing. So that's an interesting trend that we see. Okay,
great. Dasrick, thanks again. Thanks so much for sharing on what Ethis is doing. Ladies and gentlemen, that brings us to our presentation from ClimateTrade. We have with us Francisco Benedito, who is CEO of ClimateTrade based in Spain. ClimateTrade is a fintech company connecting companies willing to offset their carbon emissions to a large number of verified environmental projects. Francisco, the floor is yours.
Thank you so much, Navina. Thank you so much for the invitation and great presentations from my colleagues today. Well, my name is Benedito. I'm the CEO of ClimateTrade. Very glad to be here. Well, ClimateTrade was created back in 2018. I was coming from a financial background. I've been banker for more than 15 years and working from the very beginning on blockchain. I was one of the early receivers of blockchain knowledge, to say somehow. And so I started to work on that and to apply it to climate. No? So I'm the founder of ClimateCoin that we founded initially 2017. And then we created the first NFT marketplace for climate worldwide, which at that moment the NFT name was not too much around. No? So that was early 2018. And it was too early for the companies to understand blockchain, crypto, or anything related to sustainable finance with new technologies. No? So at some point, we moved to move the platform to create ClimateTrade. ClimateTrade today, it is a fintech platform, fintech company that works in the social good space. We were recognized one of the 10 leading companies in Europe, and fintech applied to social and environmental. So basically what we do in ClimateTrade is we help companies to achieve carbon neutrality. And what was happening today is that in the carbon markets, in the climate markets, to be generalistic, the sustainability manager had very much difficulties to, let's say, decide themselves what to buy and know exactly if they were generating a positive impact or not. No? Basically, the sustainability managers on companies, they had a carbon footprint that they had to compensate. And so normally they just got the phone or email and contact brokers that were selling that offsets. And that was the story, no? Normally. They were talking about price, but not about too many location, but not about too many things. No, basically ClimateTrade, what comes is to bring a marketplace where to transform all that. No, we want to put in contact developers from all around the world, developers that generate projects to offset your carbon footprint, whether as an individual, whether as a corporation, and we put them in contact with corporations. No, basically. The corporations need to generate their non-financial reporting every year if you have more than 250 employees in Europe, and progressively that will be extended worldwide. And obviously, if you're a listed company, you are already for some years doing that non-financial reporting. You know? So basically what we offer is a tool where you can rapidly generate your cart, buy your carbon credits with all the details, SDGs, certificates, all the information related to the project, all the documents, legal documents, description, pictures, everything in one place, both from the voluntary perspective, and now we are incorporating also the mandatory. We're going to be the first company in Europe to have access digitally to the marketplace, to the mandatory market, sorry. So basically, we use blockchain technology for that. That's the great innovation that we incorporated also. And why this is important, not only because we reduce speeds of transactions, because we did reduce bureaucracy. No, I mean, you just accept terms and conditions, you sign up in our marketplace, and then right away we make a small, obviously we need to validate your account. And once we validate your account, we make that small due diligence or KYC. You can already buy credits from different developers worldwide. And well, that reduces the speed compared to normal brokers that are contracts, what is called the ERPA contracts, ERPA agreements, and they have to normally approve internally in the company. So normally it takes even 2 months. That's why I mentioned here Acciona. Acciona is one of our partners. They came to us because internally, intra-group in the company, it was taking 2 months to proceed with the purchase and emission of all the certificates and everything, because bureaucracy. So basically what we do is not only provide more speed of transactions, if not at the same time, we provide traceability and transparency of transactions. And that's very important because the carbon markets are like back in 1997, they were creating the Protocol of Kyoto, as you may know, in 1997 in the 5th COP. So from there, what happened is that normally the developers that were the ones that were generating the project and generating and making the risk, taking the risk to generate the project, sometimes they were not receiving the fair price. The broker was receiving the first price, no? The traditional broker, they were even called carbon cowboys, no? So at that point, what we thought is, hey, why don't we, if we put in contact directly offering demand and we use blockchain technology, we can trace funds towards the origin and we can provide transparency to the buyer that that money is going to the developer. And that's what we did, no? Also, at the same time, we guarantee that the certificates are canceled in the registries. So there is no double counting in the markets. So therefore, there is no credit sold several times. That is the double counting that I'm talking about. So that's what we provide. And obviously, if we eliminate intermediaries, we reduce costs considerably. And together with that, in 2018, we got the recognition of the UN as the best solution in the world for the carbon markets post 2020, which is the kickoff of the Paris Agreement, as you may know. And well, in that year, and taking a flight to one of the COP in that case was Bonn. We thought about creating a carbon API. So we created the first carbon API that uses blockchain technology. And why is that important? Because as you may imagine, every product that you know today is going to be labeled, no? In CO2 label, no? It's going to be the carbon labeling that if you can Google that. So the carbon labeling is going to happen sooner or later in every industry. And every product that you know, you need to know how much CO2 is emitting for being produced. That's necessary for accounting the CO2 we are emitting and for being able to reduce it and achieve the goals of Paris Agreement. No? So in that terms, we created the first API that allows to integrate our technology in any company, any system, any app, any website of any company to provide their users, their end users, the carbon neutrality of their products, or at least the option to compensate the carbon footprint of that product. So imagine you are buying a phone from Telefonica, which is one of our customers. You go to tu.com, you can buy phones carbon neutral already, or you can buy TVs, or you can buy any other electronics carbon neutral, thanks to our technology. And you receive a customized certificate for you, where it states the CO2 that you emitted, or that product emitted, and which project your money is going to offset that, no? So, and then you have a hash in blockchain that you can see the trace of the money, and in the second step, the certificate that has been canceled to prove that, no? To state that carbon, to compensate that carbon, no? We are doing this also with hotel chains. We are doing this also with airlines, also with gas stations, cargo shipping, transportation services, and all what you can imagine. Our API is very easy to integrate. We integrate it with a simple code that it gets generated once you select the projects where you want to offset from. And then we have a dashboard that it can give you information on daily basis, on real time, obviously, on all the mitigations made by your customers if you are a company. We give you that certificate to the end user, certifying where your money goes and the amount of CO2. We can do this also in retail stores with the card credit machine. And regarding to our projects, which projects do we use? We only use projects that are already certified and verified by the biggest standards available worldwide. So basically, we use CDM, BERA Gold Standard, American Carbon Registry, and then national registries. Our API allowed one thing that we will be announcing now in the COP, but in terms of one real pilot there, we are the first company that is connected already to 2 of the carbon registries worldwide. So ClimateTrade allows in Colombia to cancel automatically credits once you are purchasing them. So it's instantaneously you receive your certificate of proof of cancellation in the registry. The same, we built the first blockchain registry for carbon in Europe. with our partners from BME or Six Group, which is the owner of the Stock Exchange of Spain, we built the first carbon registry in Europe that we aim to replicate in other countries, and that we are now in a pilot in our project also to build 5 more markets in Latin America together with these proper registers. No? So that guarantees us to cancel automatically the credit, so there is no double counting. We don't have to be waiting for that certificate, and at the same time, we have all the projects that are registered in the registries in our platform. Some of the projects we work with and that allows us to generate a positive impact is like, for example, Madre de Dios. Madre de Dios is a very devastated area because of the gold mining in Peru. So it's Amazonia, it's the Amazonas. As you know, the Amazonas is touching different countries, so not only Brazil. And well, it is a project, self-sustainable project, where the community lives around the conservation of forest and commercialize Brazilian nut. So commercializing Brazilian nut and receiving these credits out of the conservation of the forestry avoids deforestation and allows communities to live properly and to live correctly in that area. And that's what allows not to be deforested and have to sell the wood or any other things. No? And well, some of the SDGs that the projects are contemplating are including, and all of this is mentioned and referred in the platform. Also, we work with Acciona. We like to mention this project, and obviously it is a renewable project, and there are some things regarding that could say in terms of additionality, but I mean, what is important of a project is what good is generating, what impact is generating the community also that they are doing now. So this is a great project, investing a lot of money from the, let's say, the return that they get, not only with the carbon markets, with the carbon credits, but prior to that, with the benefits that they generate for the community, not only changing fossil fuels, but generating the schools, hospitals, and all the labor that they hire from that area by Acciona, one of the biggest multinationals in the world, maintaining that wind park that obviously is avoiding emissions. No? And so we understand that not only is the project itself, but also the benefits for the community they are generating, no? And the amount of CO2, equivalent tons of CO2 that we are avoiding by obviously not having a coal plant or any other type of project there, no? And as you may see, like the community is very important, and the families on that poor areas that have another type of life thanks to this type of projects, no? And well, another project that we like a lot, and in Brazil, because I've been there and I know the problem with waste in Brazil, it is the Recreo and many other landfills that we work with in Brazil at the moment, because Brazil has a very big problem in terms of the treatment of waste. No, so not only because the emission of methane to the atmosphere, which is, as you know, more polluting than CO2, not because of that, but also because the waste in Brazil was not well treated. I mean, it was managed most of the cases by mafias. They get the price out of the contracts, and they just throw the garbage and the waste all around with no proper sanitization measures. So these projects, what they do is they transform, they move that waste into that areas that are sanitized, and then cover and avoid the methane emissions. And with tubes, they generate electricity out of that methane that other ways would be thrown to the atmosphere. No? So it is a project that it comes from the CDN, the United Nations Framework for Convention for Climate Change. And it is a project that we like a lot in terms of transforming that emissions that would be and generating an outcome that not only avoids the poisoning of the seas that is happening in the Baía Guanabara, for example, in Brazil, that all that waste was poisoning through the Phreatic Sea the oceans. At the same time, we avoid the emissions of methane. No? So that's some type of projects we are working in our platform. Some of them we have like more than 100 projects in the platform today and growing every day. And today we work with some of the biggest corporations, not only in Spain, but also in Europe, and helping them to achieve carbon neutrality. Today we are in Europe, in Spain, and moving in Spain, Portugal, sorry. Now we are moving to all the 3 European countries and United States and Asia. So we will be there from before the end of the year with presence. So I encourage any company that needs help to focus in the strategy for carbon neutrality, how to avoid greenwashing, how to select the best product for their company, and to focus that strategy on towards the decarbonization of their sector. No, how do their company, how do they want to achieve net zero and when? But during all that process, they have to obviously compensate at some point. No? Well, our team now, it is very multidisciplinary in terms of not only a powerful internal IT team, but also marketing, communication, human resources, administration, and legal. And together, my partner Jose and I, who are the ones that are leading the strategy in terms of where he's coming from the UN and I was coming from the banking sector. So together we pretty much mark up how the type of projects, the strategy on the sustainability space that we have to follow, and which is the road in terms of that thesis, no, and that environmental thesis. And also Anna, who is our COO, that is leading the daily team, all the teams in the company in terms of deliveries, which is very important also. And well, we, as I mentioned, we were recognized by the UN in 2018 as one of the best solutions in the world. We are part of some big associations and organizations like the Climate Change Coalition of the United Nations, and also the International Chamber of Commerce as board members in the Spanish chapter, and now partners for them for helping companies also achieve carbon neutrality. We have advisors such as Juan Verde, which is the former advisor of the President Obama and President Biden. And well, together with that, recently we received the prize of the UNWTO as the best solution in the world for the travel industry for our API. No? So basically, case studies that you may see that we do is with how do we make events, corporate events, carbon neutral? That's something that now everyone is demanding. So you may imagine if you are a corporation, if you are a company, I always put the same example. When I go and eat in a restaurant, I need to take the ticket to take it to my accounting later, no, in the company. And I have to fill up with the tickets because obviously I have to put that expense on the accounting every year. This is the same. The CO2 is going to be the same accounting. Every event, every carbon footprint that you are generating as a company, you will have to measure it. You will have to. So if you can have the events already carbon neutral, you don't have to measure that. And that's same for flights. We do Cabify, which is the like Uber of Latin America and Spain. So we do that for cars, also real time, electronics and construction. Well, and thank you so much. I mean, it was a great pleasure to be here. Open to any question that you might have, and yeah, thanks.
Thank you so much, Francisco. That was an excellent presentation. Ladies and gentlemen, we only have time for one question, and I think this one probably is best answered by either Dasric or Andreas. So the question is, what are the common demographics of the investors? Are they mostly the millennials or a mix? Presumably, they are the more environmental conscious group. Perhaps Dasric, if you would like to attempt this one.
Yeah, very quickly, and I can draw from Malaysia, I guess. I think commonly we always categorize investors in 3 different demographics. One being is the retail investors, and rightly put just now, I think a lot of retail investors here are in the millennials set of community. Why we call it retail is actually because they are shopping investors, meaning they wouldn't invest in the big ticket items. I guess maybe around a range of 1,000 USD or 3,000, 1,000 ringgit Malaysia, so to speak, within that range. And these are the ones who are, the Gen Ys, the millennials on that front. In crowdfunding play, I think there's a lot of retail investors pool there. Secondly, is actually in Malaysia, there's this term of angel, or rather high net worth individual or angel investors. There's an incentive for Malaysian angel investors under the MBAN, the Malaysian Business Angel Networks, whereby they can get certain tax incentives if they actually invest in a certain ticket amount and certain size. There's a guidelines on that one for Malaysia. But these guys are probably the one who invest in 6 digits or millions and stuff like that. And the third one is actually what we call the sophisticated investors, which is the VCs, PEs, banks, institutional investors. In answering your question with crowdfunding play, I think a lot or majority of the players or investors is actually in retail investors in Malaysia, as far as crowdfunding goes.
Right. Okay, great. Thanks for that, Dasric. So that brings us to the end of our workshop today, and I'd like to once again thank Russell, Andreas, Dasric, and Francisco. Thank you so much for sharing today. Ladies and gentlemen, as you click the leave button, you will see that we've got 2 questions to ask you just for your feedback. We'd very much appreciate if you could answer those 2 questions, and we hope to see you at future events. Thanks, everyone. Have a good evening. Bye.
Bye, everybody.
Bye, everyone.